In this video, I'm going to do the technical analysis of Dow Jones Industrial Average Index for the week starting from 3rd of May 2021. This is the weekly chart and these are the weekly candles. As I predicted last week, that because of this bearish hammer, the week starting from 26th of April 2021, it was supposed to be a bearish week, and yes, it was indeed a bearish week. One of the reason was its the divergence of the current price from its moving average, and the other one was uh, this critical resistance that market was supposed to respect, but market did not. Now this candle is formed here, and market was kind of stagnant in this week. The market was kind of stagnant. Okay, sometimes it went up, then sometimes it went down, and so. But overall, it was a bearish week. This again indicates that the markets, not just this market, means not just Dow Jones Industrial Average Index, but the market from all over the world, they are entering into a short-term correction. So here I am expecting the market to come into the correction. I am still bearish on the market. I'm not expecting the market to move up. However, if you have any long positions in this market, because of the momentum that the market is having, if you have any long position, then make sure that you are not trading without a stop loss. You must use a stop loss. And also the same advice goes to the bears. Um, if you are shorting here, or if you are buying puts, then make sure that you use the stop loss, because the market is at the moment where the market has excellent momentum in the bullish direction, but because of some factors the market is unable to follow its bullish trend. Otherwise, the chances are that the market will come down, that the market will come into the correction, and and this market will also follow the global market, because globally the markets are entering into the correction or have already entered into the correction. Now let's talk about the indicators. First, let's talk about the moving averages on this weekly chart. So moving averages are clearly supporting the bullish trend. Clearly supporting the bullish trend, but again, the problem is the divergence of this price. The closing price was 33,874, and the exponential moving average is at 29,988. So there is a divergence of approximately 4,000 points. Secondly, the divergence from ALMA is at 31,717. Okay, so the divergence from ALMA is approximately 2,000 points. So this is the reason why I was saying that, yeah, that even when the moving averages are supporting a bullish trend, but the factor of divergence and the factor of the resistance, this was the resistance that market was supposed to respect, but market did not, which is why the market is now coming into the correction to respect this resistance. Now the other indicator, which is the Ichimoku. So market is not expected to hit Ichimoku anytime soon. Market is at 33,874, and like to hit the Ichimoku, it must fall by at least 5,000 points, 5,000 points to hit the Ichimoku. So this thing is not going to happen at least in the month of May, until and unless there are some heavy falls. Okay, for example, like this was a very heavy fall. This one was again very heavy fall. So if we see some heavy falls in the market, then only the market will be able to lose 4,000 or 5,000 points to hit the Ichimoku. However, the chances of happening such an event are not that good. Now let's talk about other indicators. Okay, so if we talk about the stock RSI clearly indicates that yes, now that the stock RSI indicates that now the market is changing its direction. The market is changing its direction. Earlier it was bullish, and now the market is changing its direction. However, it has not changed its direction from bullish to bearish. Okay, but it is certainly changing its direction. And if we talk about the MACD is still supporting the bullish trend on the weekly chart. If we talk about the momentum, yes, there is some good momentum in this market. So all of the technical indicators are supporting a bullish trend. However, because of the factors that I told you, because of those factors, the market is expected to come into the correction rather than to follow its bullish trend. Now let's move on to the daily charts. Now we are here on the daily chart. If we see on this daily chart, then we can clearly see that the market has shown weakness. In last 2 weeks, the market has shown weakness. So rather than following its bullish trend, market is stagnant here. Market is indecisive, and I will not say indecisive, but I will say that the market is just trying to enter into a correction. Anybody can see here that the market is stagnant and the market is showing clear signs of weakness. So I am bearish here on this market. Now if we talk about the technical indicators, then first the moving averages. Again, the moving averages are supporting the bullish trend. They are clearly supporting the bullish trend. Okay, there is a clear fan out. But again, if we talk about the divergence of the price from its exponential moving average on the daily chart. So on the daily chart, this exponential moving average, the divergence is approximately 1,000 points. Okay, and it's been almost 2 months. It's been almost 2 months since the market respected the moving average, particularly the weighted moving average and the exponential moving average. So the market has to come down in order to respect its moving average, in order to cover this divergence. Okay, this divergence. And if we talk about the Ichimoku, then the market is yes, so there are chances because the Ichimoku on the daily chart, the Ichimoku is not that far. Ichimoku is around 32,500. Okay, so there are good chances that the market may meet Ichimoku here. Okay, so Ichimoku and also this support. So this support is around 32,500. Ichimoku is also at 32,500. So there are chances that the market may come down and may meet Ichimoku and this support, and then the market may try to bounce back, but not before touching the Ichimoku and this the support. Now let's talk about other indicators. If we see the stock RSI is clearly bearish, fully bearish on the daily charts. Fully bearish means stock RSI is clearly saying that there is a weakness in the market and the market may come down anytime. It may come into the correction anytime. Secondly, this stock RSI is also supported by the MACD. So MACD is now it's now quite clear through MACD that the market is coming into the correction, that the market is bearish. And if we talk about the momentum, then the market lost its momentum on 20th of April 2021, and thereafter there is no momentum in the market. So on the daily chart, okay, the indicators are giving mixed results. So these indicators, stock RSI and MACD, they are indicating the same trend, and this trend can be clearly seen here in the market, that the market is stagnant and market is clearly showing the signs of weakness. So here my advice to all is that if you have any long positions, then exit your positions, and if you do not want to exit your positions, then make sure that you trade with the stop loss. You must trade with a stop loss, not without a stop loss, because the market may come down anytime. Okay, so do not trade without a stop loss. And if you have shorted, or if you have bought puts, in that case you can also use the stop loss. Okay guys, so this was my technical analysis for Dow Jones Industrial Average Index for the week starting from 3rd of May 2021. Should you have any questions or queries, you can write your comments in the comment box. Should you wish to participate in my profit booking strategies program, then I have given that the link of the program in the description of this video. You can take a look.